What is up? What is up, YouTube? It is your boy Shabby Shambles here. We are going to talk today about the good, the bad, and the ugly regarding Palantir's Q3 earnings. And yes, there is good news. Stay tuned. Alright, let's dig into these numbers a little bit. Now, we start here with the revenues up 22% year over year. The cost of revenue also up, but we see this gross profit number is up by 65 million. Not too exciting, nothing too crazy, but good, right? Fine. And that's sort of the headline for the whole earnings call, the whole balance sheet at this point. Not very exciting, but fine. Not a ton of change, right? I mean, you see here, like, oh, we're up to, 30 million here. Well, 30 million here, which is to be expected. They added on 22% in revenues. They get to add on 30 million from 400 million. That's about 75%. No. 7.5%. I'm sorry, what? I don't know what I'm talking about. So they added on about 4.5 or 7.5% here. But there's not a ton of excitement here. I had a really bullish idea that Palantir was going to crush their earnings call, and they just didn't. They just did not, which was somewhat disappointing to me as I watched the earnings call. But, I want to draw your attention to this cash on hand number right here. $2,411,290,000 in cash on hand. They got it sitting in a vault back at Palantir headquarters out in Denver. Just casually $2,411,000,000 just lying around, right? And I think that this number is why we're seeing the low growth rates. Not underperforming, right, by any huge margin, but not exciting growth rates. And it's because they have this huge runway that they have given themselves. This huge amount of cash on hand. And I think, not financial advice, just my opinion, I think that this is responsible corporate governance. Ray Dalio has said that cash is trash. But recently, he has reversed that opinion. 9 out of 10 CEOs are saying that they want cash on hand. That they think that is one of the most valuable assets in this market. And we always want to gut check ourselves. We always want to see, does that logic make sense to us? Because CEOs can say whatever they want. But if I don't understand what they're saying, I'm just going to assume it's nonsense. But in this market, when we're looking at interest rates of 5%, 6% on loans across the board, if you're looking to take advantage of the opportunities that this market presents, you don't want to leverage yourself. You don't want to be paying 5% interest on a $2,411,000,000 loan. And look at this. Palantir doesn't need to pay that. they can just make use of their cash reserves as they see fit. And also, we don't know how long this bear market is going to last. And a $2.4 billion runway is a pretty long runway. So they can get through next year. They can get through the year after. This number right here, 2.4 billion in cash on hand. And by the way, it has grown since last year at this time. They have grown their cash on hand during a recession, which means that they have taken the budget for the company and not much, 320 million, put it in their bank, put it in the vault over at Palantir Technologies for a rainy day. Folks, this means that they think that things are going to get worse before they get better. This means that they anticipate better deals to come in the future, and it is not just Palantir. Venture capitalists across the board are doing the same thing. There's a ton of dry powder in this market. A ton of cash sitting on the sidelines waiting to be deployed. And I think once we see the proper match to light that fire, the Fed just one quarter, not raising interest rates. Once we see the Fed start to slow down what they are doing, the interest rates going through the roof, we will see this dry powder start to ignite. And Palantir is in a position to take huge advantage of that moment. Is it discouraging to me as an investor to watch the stock lose 12% in a day? Sure. Is it discouraging to me as an investor to watch? Now, I didn't get in at the top of the market, but and at $40, I mean, the stock was just so clearly overvalued. But we're down even from my buy-in price. So is it encouraging to me as an investor to see the stock go down by 75% from where it was 2 years ago? Year and a half ago? No, it's not. It doesn't feel good as an investor. But companies are not their stock price. You gotta look to the balance sheet. Is this company being responsible with the assets they have? I think so. If I were in their shoes, I would also have huge cash reserves. Unfortunately, I don't have $2,411,000,000 sitting around. But if I did, I would just sit on it. Just sit on it and wait for the time to be right. I think it's responsible corporate governance. And I mean, looking at the balance sheet, I've been through this balance sheet with a fine-tooth comb. I mean, the growth numbers aren't outstanding. The revenue figures are not outstanding. They're fine. Everything is fine. But you look at the balance sheet, is the company solid? On the balance sheet. And I gotta tell you, they look good to me. I can't find a single thing that is justifying this overreaction from Wall Street. I can't find a single piece of evidence that justifies the stock price going down 12%. And yeah, those calls I bought aren't going to pay dividends. But I'm a believer in this company. And in order to change my mind, it's gotta come from the numbers. It's gotta come from the data. It's gotta come from the balance sheet. Everything else is just people talking. And you look at the numbers, and you should go through this balance sheet yourself. Right? I'm just one guy. This is just my opinion. This is not financial advice. But if you go through the balance sheet yourself, if you learn to read the balance sheet, the company's doing fine. They got $2.4 billion sitting in their vaults, sitting in their war chest, just waiting for a rainy day. And this to me is a strength of the company. And you might accuse me of putting on rose-colored glasses. Maybe a fair criticism, but the companies that win in bear markets are those that are strong, not those that are buffeted by the winds of the market. We're looking at a company that has government contracts, that has payments coming from the Department of Defense, that has a solid product that delivers results, and $2.4 billion sitting in the bank. They're not going anywhere. Their stock price might go up, it might go down, in the short term, in the medium term, whatever. But the company itself is rock solid. And so long as the company itself remains rock solid, I don't see a reason to sell. Certainly not at this price. Certainly not at this price. You look at the Wall Street forecast for where their growth numbers are going to be next year, and you could say, oh, well, they don't know what they're talking about, but I think the forecast is fair. They're projecting a 25% growth rate by this time 2023. I think Palantir could easily hit that. Easily hit that. Especially if they deploy some of this money on investments in Q4 and Q1 of 2023. I don't think it'll be hard for them to hit it at all. So yeah, we got beat today. The bull case did not pan out, but in order for me to change my mind, and I hope in order for you to change your mind about the company, you gotta look at the company itself and not allow yourself to fall prey to the whims of the markets. That's my opinion. Remember to like and subscribe, and I'll talk to you next time. Take care.